Hello, welcome to the Zacks webinar series. Today's topic is going to be portfolio style exposures and performance attribution, how to use those together to do a more effective review of a portfolio. There are really two topics in today's session. The first one is to explain what portfolio style exposures are, and then to show how to measure and understand those. The second topic will be how can style analysis and style-based attribution be used together to provide a better analysis. And in there we'll have two case studies, one simple one and one I call not so simple because there's a lot more analysis to be done in that one. No doubt many of you already know quite a bit about portfolio style exposures, and so topic one will be fairly brief just to bring everyone up to speed. We'll spend more of our time on topic two and on the case studies. Now, very simple, portfolio style exposure is just the amount of an investment factor that a portfolio has versus the market or a benchmark. Does it have more of book to price or less of book to price? This is what a style exposure is. Now, the reason we're interested in this is to allow investors to, first of all, better understand the portfolio, and also to effectively describe and communicate the fund to whatever audience is appropriate. We as asset managers and asset owners really need to do this to succeed. We have to understand the portfolio. What are the drivers of the portfolio? Where does the risk come from? And then many of us have to explain this to some audience, whether it's a prospect, a client, or a board of directors. We have to be able to do this effectively. Now, very simply, and this is a very simple schematic just to start off, if I'm going to look at a single factor, say book to price, and I'm going to look at my portfolio, my fund, and currently the book to price, let's say, has 4 units. I want to compare this to a market or a benchmark. And now in that portfolio, the market portfolio, I can measure and see that the book to price is only 2.5. So right now I know that the portfolio has more of a book to price than the market. This difference is what we call the style exposure. Now in this example, this is a raw style exposure of just saying book to price is equal to 1.5. Since this fund has more book to price, this is typically classified as a value fund. The idea is once we have style exposures, we're able to properly classify a fund and explain it to an audience who doesn't know anything about the fund. A fund that has more EPS growth rate could easily be classified as a growth fund. Again, we're putting labels on these exposures. Another fund that has less price volatility than a benchmark is going to end up being classified as a low vol fund. The idea is with style exposures, looking at multiple exposures, we can clearly show how a fund could either be value. We can look at the book to price factor, we can look at the cash flow factor, the dividend yield. There are a great number of valuation ratios that we can use to determine if a fund is value or not value. We can classify a fund as growth if we look at its either historic growth rates for earnings or for sales. We can look at projected growth rates from street estimates. There are a number of ways to measure growth. And what's nice here is we can also determine a source of growth or what kind of growth. This is important. A growth manager who looks just at history will be clearly different. We may come across a fund that has positive exposures to both value and growth. Maybe not quite as big as a traditional value fund, but this would end up being called a GARP fund, growth at reasonable price. For those of you who are curious, we can also come across a fund that has negative value and negative growth, and we're going to call that a DARP fund, D-A-R-P, which stands for decline at a ridiculous price. We may look at a fund that is a special purpose fund, such as an ESG overlay fund. I would want to look at the growth and value factors and compare that exposure to the overall benchmark to see if that would bring any unintended changes to my total fund. I may bring in a 5% ESG overlay or 10%, but I want to see if my growth or my value factors are also going to be changed. If this particular ESG overlay is benchmark neutral in terms of value and growth, and I know I can bring that fund in quite safely. We could look at other factors. We could come up with low vol fund. We could come up with momentum fund, looking at price momentum. And what's nice here is we can actually determine if a fund that may look like a growth fund may actually be a momentum fund rather than a growth fund. So using momentum gives us a better classification on the growth characteristics. So now, when we want to compare style exposures of a fund, we do have this raw factor exposure. In this case here, it's the book to price of 1.5. But on the Zacks portfolio report, we're going to be showing 20 exposures. And these exposures are all normalized by dividing this difference by the weighted standard deviation of the market. This is going to provide us a common scale which we need to compare exposures. So the real style exposure is a normalized measure. One can ask who uses portfolio style analysis, both asset managers and asset owners. You have regular managers, you have advisors, you have fund-to-fund managers that need to understand the various funds they're going to combine. Under asset owners, you have pension funds and foundations who need to understand what their fund is, even though they're not an asset manager. Within each group, you can have various teams. We have the client-facing team of an asset manager, and they have to explain the fund to their client because they want to grow the confidence of the client in your firm. Showing a style report that we have here will give that confidence. It can also show clients that their goals are being met. It shows it very clearly and graphically. Also within the asset manager team, you have the marketing team. They have to present the model portfolio. If they can present that fund in terms of their current style characteristics, which gives more information than just historic return, the prospect is more likely to understand how your fund is going to fit into it, and you will obtain more of the prospect's trust. In a pension plan or foundation, you're going to have a CIO, Chief Investment Officer, and that person is responsible to understand the total plan, not just each fund in it, but the total plan. And using a program like ours, it's possible to combine these exposures and come up with that part of the description. And these graphics are easy to explain, easy to understand, which make them very nice to present to a board of directors. Within that CIO office, there's also going to be a plan staff, and they're going to be out there evaluating candidate funds. Here's a chance to get the holdings of that fund, do our analysis so you can measure the fund. You could then even come in and do a what if analysis on your total plan by adding the fund in and doing a second analysis. Again, all of this is very straightforward. Now, if we look at the actual profile report, this is the Zacks style analysis report. We're showing 20 style factors. These are well-known factors throughout the industry, so your audience will always understand what you're talking about. If this factor score is positive above the 0 line, then you know the portfolio has more of that factor. In this case here, if we look at beta versus the S&P, because this is a positive score, you can say that you know that the portfolio has more beta than the benchmark. Think of the 0 line as the benchmark value of the style. We take these 20 factors and we also group them into 5 style groups using color. And this allows you to put them in to make it easy to describe. You can talk about profitability factors rather than having to go into technical descriptions of debt margin, operating margin, and so forth. You have market factors, beta and market cap. You have a series of value factors, all of which give you a great description about the value of a fund, and they're all in terms that your audience will understand. You also have the growth factors, and we have 2 leverage factors. Again, the purpose of this report is to be able to show this, and it's easy to understand so you can explain it with confidence, and it's easy for you to communicate to your audience. Again, this is just a listing of which factors are in each group. So again, you've got the 4 profitability factors from gross margin to return on equity. You can see the 6 value factors, the 6 growth factors. One point about the growth factors is that you have a measure here on both historical growth and projected growth, so you can see exactly what kind of growth manager this particular fund is. Now again, I mentioned being able to compare multiple exposures, and this is where we take the raw exposure, that difference between the means, and we're going to divide them by a standard deviation. This allows us to compare any of these 20 exposures to each other. So if the magnitude of an exposure is twice as big for factor B than factor A, then you can confidently say that factor A is twice as exposed within your fund. Again, what this allows you to do is within a fund, you can see which factors have the most exposure, because think of style exposure as an exposure to risk. And you can see which factors a good chance of your forward-looking risk will come from. Another good use of this is if you're comparing portfolios. If you want to compare the same factor exposure across portfolios, this gives you an accurate measure to do that comparison within any individual factor. Overall, the value of this report in a peer group comparison is that you can use this to show the uniqueness of your fund. So if you're in a finals presentation with 2 or 3 other funds and you're able to obtain the holdings, you could do this report for all 4 funds. Some of the output is in Excel, so it's very easy to create a comparison, and you can show your fund's unique exposure, which may help in the very final presentation. The basic report is in 2 parts. The top part is basically a presentation PDF to show each of the 20 factors with labels on it. Again, this is a very easy, not only to explain, but easy to understand style statement about your fund. In the lower part is a data table that has all of the raw data used to calculate each style exposure. You're going to see the portfolio average, you're going to see the benchmark average, you're going to see the market or benchmark standard deviation, all used to come up and calculate the style exposure. You also have the number of stocks in the fund and the benchmark that actually have each particular factor, so you understand the completeness or incompleteness of a factor within your analysis. And that bottom table is in Excel, so it's very easy to export and to include in your own custom analysis and any kind of automated client reporting. Now, just to show some typical reports you're likely to come across out there, the typical value fund will have positive green bars because that's positive value, better than the benchmark. And the same fund will have negative growth funds, so you have the negative red bars. In addition, this fund is also a smaller cap fund because of the very low market cap style factor. So this is basically, compared to this benchmark, it is a small cap typical value fund. Now you have labels to describe this to anybody else. You can look at a typical growth fund where you have the negative value, the positive growth, and again here you can say which kind of growth. This particular manager really likes to look at historic growth, the 5-year growth rate on sales, the 5-year growth rate on earnings, and this is how this manager is choosing stocks. This is this manager's investment process, measuring historic growth and choosing stocks that have more historic growth than the benchmark. We have a factor here for projected growth, and the manager is benchmark neutral on that. The manager is also going for larger stocks. So compared to the benchmark, this is a larger cap fund being based upon historic growth rates for sales. And so again, a very easy to explain and show description of the fund. Another typical fund you may come across would be a concentrated fund. And in the table below, you can actually see the number of stocks for each factor. In this case, it's 19 or 20. So very clearly, it's a concentrated fund. And you can see some additional information because you can see the emphasis, the margins, the return on equity for those 19 stocks. They're also choosing smaller stocks as well. Again, you can use this information to verbally describe a fund. Another example would be what I call a theme overlay example. This could be an ESG fund, it could be a low fall fund, it could be any particular characteristic that is not typically represented with these 20 bars. ESG is one of my most obvious examples. And again, if I want to analyze that fund, I know I'm not measuring the ESG factors, but I am measuring its value and growth factors. And you can see here that this fund is very benchmark aware. If you were to add this fund to your portfolio, this fund would not alter your portfolio's overall value and growth exposure to that benchmark. It just will not change it. This matches the benchmark. In addition here, it's choosing profitable funds as well as ESG, and it is choosing smaller companies, so you will bring down your market cap exposure a little bit, and that may be the nature of ESG. Again, even though we're not measuring ESG, you're learning quite a bit about how this fund is going to work within your total fund or total plan. The snapshot report, it's a point in time. I'm looking at the holdings as of March 31st or June 30th, and it's saying, these are my stocks today. What is my style exposure? Hence, it's showing me what is my forward-looking risk exposure. An extension of that is to link together these reports over previous time periods, in this case here, previous quarter ends. And this allows me to see how a particular style factor or group of factors, how the manager used those factors. What did they choose? Positive value, negative value? Were they consistent? All of this works into a very informative historical style analysis. One example is going to be a single factor. And this is where I'm plotting the style exposure for this fund against this benchmark using the holdings at each time point. So here again, I'm actually showing the manager's investment process. These are the manager's decisions. In this case here, for this factor here, beta versus the S&P 500, the manager had a very consistent exposure. They did not change their process. There is no style drift. And the exposure is positive. So the manager favored stocks that had a better beta versus the S&P 500. Another kind of report is to show multiple exposures on one chart. In this case here, I'm showing the 6 value factors over the previous 2 years. Well, and I can see here that all of the value factors, first of all, they're all positive. They're all greater than 0. So the manager was consistently choosing value greater than the benchmark. They were fairly consistent. I see very little jaggedness to really talk about. This is a fairly consistent manager. You know, no style drift. They stuck to their guns, and they really chose. And I can see which value factors are stronger than other ones. So this top one would be a very strong one, and this probably is the cash flow to price yield. Whereas these other factors, they're positive, they're just not as strong. So again, this is a great way for me to look at a value manager and see just how did they work? What were their decisions? We will now start part 2 of the webinar, talking about how using style analysis and performance attribution together can give you a more complete picture of portfolio analysis. Performance attribution, this is a Brinson attribution where we have 2 investment decisions that we're measuring. One is the strategic weighting, and the second is the stock selection skill. This is a typical sector Brinson attribution where we are allocating the performance different to both allocation effects and selection effects. In this particular fund here, we can see that the portfolio earned 12.2% and the benchmark 14.8%. So there was an underperformance of minus 2.6%. And this attribution shows that a negative 7% is the measure of the stock selection skill, whereas the allocation effect plus 4.4 definitely helped the performance. But again, the stock selection skill was really very bad at minus 7%. With performance attribution, you can, instead of using sectors for the classification, you can use a style factor. For example, you can take a factor like cash flow yield, We can measure that across a benchmark or market, and we can divide that into 5 quintiles, each an equal dollar size, so that the top quintile contains stocks that have the highest cash flow yield. By doing this, and since managers actually declare their styles, we should hopefully see that the fund is overweighted in that quintile with the higher factor value. And we should also see a better stock selection skill in that higher fractile. And this is a way to measure investment results back to the investment decisions. On the Zacks attribution system, this is a list of the various factors that are available to be looked at. So for our first example, this is a fund. It's a real fund. It's a separately managed account. It's been around for a long time, and its description is that it's a large cap value fund. So it's chosen the Russell 1000 value as its benchmark, and it chooses stocks who have good market position, healthy balance sheets, and significant cash flow generation. So right there from the manager's own description, we're able to measure 2 factors, cash flow generation and the market cap factor. So in order to see what the manager's investment process was, we're going to look at the style history for the value factors. And the factor there in bold is the cash flow yield. And as you can see here, this manager definitely chooses stocks with higher cash flow yield and consistently does it through all the time periods. Now we can look at the style-based performance attribution. Again, here this report is taking cash flow to yield, dividing the benchmark into these quintiles, equal size quintiles, ranking by the cash flow yield. We can see here the portfolio, over 50% of the portfolio is invested in stocks from the top quintile of cash flow yield. So the manager is doing what they say they do. We can look at the performance effects. We can compare the total return of the portfolio and the benchmark. And right there in the attribution selection effects, we can see that there is a positive 1.7%, a strong outperformance by the manager in that top quintile of high cash flow to yield. So this manager is also selecting good stocks within that top quintile. In addition, we can see that through all the quintiles, the manager still had a positive stock selection skill at that 1.2%, and that it was the market impact on the other 4 quintiles that led to a negative 3.8% on the allocation, and as a result, the portfolio completely underperformed a negative 2.6%. But this report does show how the manager invested in where they said they would and how they had great stock selection skill within that quintile. So in summary, this manager is overweight in the top fractile, has positive relative performance in that top fractile. So even if a fund underperforms, that manager's client and their consultants can understand and better trust the manager's investment skills. And this is how we build our business. A side point on attribution differences. Here you see that I've done an attribution on the fund, same fund twice, but if we look at it by sector, we see that the stock selection skill is a negative 7.0%. Yet if we do the attribution on the very same fund, we see that the stock selection skill is a 1.2%. The point here is that when doing attribution, you should do it according to the factors that the manager is choosing stocks. In this case here, it was the cash flow yield because that's part of the manager's description, and not sectors. This manager does not pick stocks by sector. A second fund, we call this Fund C. This is an example of being able to analyze any mutual fund, most ETFs, for that matter, any fund that puts their holdings up on Edgar. It is very easy to download holdings from Edgar. You can do them for multiple quarter periods, whatever you want, and you can do a very full analysis. In this case, we have a fund here. It's a very large cap. It's a mutual fund. It's benchmarked against the Russell 1000 value, and it's very large, greater than 30 billion. Just a disclaimer point here is that the public equity and cash holdings for this fund were obtained from Edgar, so there is no guarantee that these holdings represent the entire mutual fund. And this analysis today is an example of measuring style factor exposures and derived performance of this particular set of holdings, not the entire portfolio. And the purpose of today's analysis is to show analysis technique and not to provide investment advice of any kind. So now we can look at Fund C's descriptions on their website. The first point they make is that the fund typically invests in companies that have a favorable outlook for long-term growth. We now have factor one. The fund also focuses on stocks that have good conditions in future earnings, cash flow, and dividends. Again, these are factors that we can evaluate within our system. So to do this, this is a style analysis, the fund against its stated benchmark. This is the Russell 1000 value, and looking at this, we can see that the fund does not have a value style statement or growth value statement, maybe some profitability, but that's about it. So this fund is fairly benchmark neutral to its stated benchmark. Often when you have this and the fund says it's a style fund, we can do the very same analysis, but we can do it against the broad-based benchmark. In this case here is the Russell 1000 fund. Here you can clearly see that we have a value style statement, all the positive green bars. Looking at the same fund, I'm now going to look at the fund against its stated benchmark at the end of the time period. And what's very interesting here is that the fund both has a value statement, it has a growth statement. Its investment process has changed into what almost looks like a GARP fund. The only way to really find out, of course, is to actually ask the manager if you're in a meeting with the manager. You can also see here that the market cap factor is quite large. So this fund over the previous 12 months has definitely changed its process, choosing larger cap stocks. So if we look at the value factors, you can see here that they're all very consistent. The manager's process pretty much chooses the same type of stocks each quarter end. And you can see that most of the value factors are indeed positive exposure, except for dividend yield. That's that black line at the bottom, always below zero. And the point here is that the manager may say they look at dividends, but the question now is, why do they choose stocks with lower dividends than the benchmark? We can look at the market factors, and here you can see this growing market cap factor. Each quarter in, the manager is choosing larger and larger market cap stocks. This is definitely a significant change. It deserves a question to the manager to see how does it fit in with their long-term plans, and are there any other changes coming down? We can look at the profitability factors in our style analysis report, and here we see a very consistent process for the margins and return on equity. We can look at the growth factors, many of which do seem to jump around a little bit, but the one factor that sticks out is that top factor, and that is a sales historic growth rate. Again, the manager is choosing stocks that have higher and higher historic growth rate. So here we have a fund that clearly values historic growth rates, the previous 5-year growth rate, rather than projected growth. So now you get a handle on the type of growth that this manager does seem to be practicing and doing more and more. So again, just in summary, the fund consistently does choose higher cash flow. It consistently chooses lower dividend yield. All the value factors are trending together, and then we have consistent profitability and the consistent uptrending of the market cap factor. So overall, this fund's investment process has been very consistent over time. It's very much in line with this description. This could be a good style message. However, If we look at the actual performance attribution by these various style factors, we see quite a different picture. Here we're looking at the style attribution by dividend yield, and we can see that this fund does not invest in the highest dividend yield or the lowest dividend yield, but right in the middle. Those are the two red factors there. If we look at the stock selection skill in blue, we can see that almost all the quintiles show negative performance selection, except the zero dividend stocks. For some reason, if a company does not have a dividend, this fund is able to choose better performance stocks in that quintile. That again would be another interesting question. If we look at dividend yield in the following quarter, just to see how it's changed, here we see that the performance is pretty much the same, the strongest in the zero dividend group, but at least the weighting seems to be more balanced, so something is happening. If we look at attribution by cash flow yield, here we see that the fund is invested in the higher cash flow yield. So the style statement is very much proved out, but the performance impact is pretty much the same, all negative. If we look at it by EPS growth, we can see that the higher EPS growth does have the higher portion of the portfolio. So the manager is meeting their style statement, but again, the performance is pretty underperformed throughout all of the quintiles. We can look at it by return on equity. Again, this is sort of a quality factor just to see how the fund may do. If you look at the average weights of the portfolio, you can see that most of the portfolio, well, the highest weighted one, is the middle ROE quintile, not either end, not low ROE or not high ROE. If we look at the performance, we can see that all of the negative performance comes in that middle quintile at minus 4.1%. The question here is, what's so special about that 25% of the portfolio to have such an low performance, whereas the rest of the portfolio, the other 75%, seems to do much better in terms of stock selection? Again, interesting, provoking questions for a manager. So again, the whole idea of using style analysis is that as a manager, you can show the style impact on your chosen factors. In this way, you can clearly show your investment process. You can show the good qualities about it, the consistency. It's a great message to give to a client or to a prospect. You're able to do style analysis of other factors, not your own factors, but other popular factors. And this would give you a chance to see what the world, and by that I mean consultants and other prospects, what they think of you, and be ready for client meetings should you get them. You can do style-based performance attribution to show your successes. And you can also be ready for client meetings, again, by analyzing other factors that you think a prospect may want to ask you about. The asset manager marketing team can use these reports to accurately, consistently, and easily describe your fund. This help guarantees you to have a consistent message throughout all of your sales channels. You can showcase your fund's performance, and should you be in a finals presentation, and if you're able to obtain the holdings for the other funds in the finals, you may find a way to show a uniqueness about your fund. And this is a great statement in the finals present, how you're different from the other three funds. And again, if you're dealing with consultants or if you're on the consultant relationship group, this gives you a chance to take your own internal description and compare it with the consultant's description to make sure that you're not misclassified. Again, in summary, thank you for attending. Should you have any questions about the concepts of style analysis, the usage, customized style factors, or any interpretations, should you have any questions about using the ZRS Portfolio Monitor System, please feel free to contact us at either of these emails. That's my email at Zacks or the Pro email at Zacks. Again, thank you very much, and thank you for attending.